Hello, ladies and gentlemen. Good morning from here, and depending on what time zone you're tuning in from, good afternoon and good evening to you all. My name is Sheriff Daramola, and for the next 40 minutes thereabouts, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective. It's the last trading day of the week, Friday, and of course, we all know how the market comes with its own peculiarity when it comes to the last trading day of the week, as market participants tend to round off their trading activities ahead of the weekend, and this usually results in profit taking activity. And this could lead to a technical setup where we see price action move in the opposite direction of the prior leading price action. So, we are going to be taking all of these into account while we review the current market dynamics together today. And in fact, I do have simple trading setups that we can actually use to navigate the market dynamic today. So you don't want to miss out on this. So stay tuned in, grab your favorite beverages, coffees, whatever you have, and stay tuned in so you don't miss out on the valuable ideas we will be deliberating on. So far this week, we have been monitoring three financial instruments, which includes the USOILSPOT, which has done fairly well since the beginning of the week. I think we had both selling and buying opportunities during the midweek, and of course, the market has been very steady in the last 24 to 48 hours due to uncertainties. We are going to be looking at that in a moment. And then we also have the USDJPY, which has done pretty well. Remember, we have been buying the USD against the Japanese yen since the beginning of the week. In fact, we have a very solid setup that gave us some significant amount of profit on that one. Will the momentum on the USDJPY continue to the upside today? Well, we are going to be looking at that one too. And finally, my favorite amongst them, which is the XAUUSD, popularly known as the gold spot. We've also done pretty well on that particular asset. Remember, we have been selling the gold since the beginning of the week before seeing some short-term trading opportunities in the last couple of days. So we are going to be looking at all of this. Stay tuned in, guys, so you don't miss out on this one. And for those who are joining us for the first time, you're highly welcome on board. The Forex Morning Mastery is an educational avenue where we come together to become a better trader by understanding the behavioral patterns of market participants and of course using that information in conjunction with the fundamentals to make an informed trading decision. So this happens 3 times in a week: Mondays, Wednesdays, and Fridays, 9:30 a.m. West African time, 8:30 a.m. UTC. So you are welcome once again, and I do encourage you to actively engage in the comment section. And if you have any questions, feel free to let me know. I'm here and willing to be of help in that regard. And during the course of the session, if you have found this content helpful, useful in making your independent trading decisions, why not give the video a thumbs up in helping this video to get to a wider range of traders who may find this content beneficial, and at the same time it also helps this channel to grow. Thank you very much as you do so. So with that said, here we shall be diving right into the business, and as always, it's our daily routine to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And of course, we are also going to be looking at how this has also shaped the sentiment through the course of the week. By monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, giving us valuable information and, most importantly, timing to strategically position ourselves for the next move. And based on the asset we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the Japanese economic docket. Now, usually we focus on high impactful event, but days where there are no high impactful event, we look at mid-tier economic features, of course. So since the beginning of the week, we've had some interesting situations. From at the beginning of the week, we saw the current account status of the Japanese economy, where we had a deficit deviation of 4.10 as the actual data came in at 1.7 trillion yuan, as against the previous month, which was pegged at 3.9 trillion yuan. So it was a deficit we had there, showing us signs that there has been more outflow than inflow into the account of the trading balance of the Japanese economy, which is not a good signal at all. Then on Tuesday, there are a bunch of Fed official speeches which will not come until Wednesday, November 13th, and that was the consumer price index, a data which is considered to be an inflationary data, which indicates the inflation level in the United States by taking into account the average change in prices of goods and services in the last 30 days. And this is one of the major events that majority were looking forward to, and in fact we saw here that the data came in a little bit higher than the previous month, but came in just as market had expected. And of course, this gave us signs that inflation is gradually thinning out, but nothing surprising at all here. Then on that same day, did we have any? Okay, on Thursday yesterday, we were looking at the producer price index, which obviously came in higher than market expected. This is an inflationary data from a wholesale perspective, as we saw the actual data come in at 3.1% as against the previous month, which was at 2.9%, and a little bit higher than what economists and market participants were looking at. They were looking at 3%, but the data came in 3.1%. And of course, this was further acknowledged by the Fed chairman, though he did emphasize in his speech yesterday that inflation is gradually thinning out, and that there is no cause for alarm at all. And he also went on to suggest a careful pace of rate cuts, which could definitely affect the US dollar a little bit. So we are going to be looking at how the market had digested this information, and of course how we will be using that data to strategically position ourselves for the next move. Then finally yesterday we saw the gross domestic product annualized for quarter 3 from the Japanese economic docket. So for those who don't know, the GDP is a data that gives us an insight into how well the economy expanded in the last 3 months. And if the data comes in higher than market had expected or higher than the previous month, it tells us that the Japanese economy expanded. And of course, when you look at the data here, we saw a 0.9% expansion as against the expectation of 0.7%. So that was about a 0.2% variance on that one, which shows us signs that the economy actually expanded, but not as what it did in the previous month, which was previous quarter, which was pegged at 2.2%. So, and I think as a result of that, we saw an immediate reaction which favored the Japanese yen. Remember, we are monitoring the USDJPY, and we saw that price drop to the downside. But I don't think that momentum will be sustained, but we are going to be looking at that in a moment. Don't worry, we are going to talk about that very soon. So finally today, Friday, November 15th, we only have one high impactful event from the United States economic docket, and that is the retail sales data, which is coming up by 1:30 p.m. UTC, and that's about 2:30 p.m. West African time. And for those who are not aware of what the retail sales data is or how important it is for market participants, the retail sales data is considered to be another economic indicator that measures the total receipt of retail stores, which obviously represents the consumer spending in the US economy. So its impact on market sentiment is considered to be significant as it provides insight into the health of the economy and consumers' confidence in the US economy as well, influencing expectations about future economic growth. Now, the expectations here is pegged at 0.3%, which is a little bit lower than the previous month at 0.4%. So what this simply means is that economists and market participants are projecting that the data will come in lower than what the previous month says. So we look forward to see what the actual data will be. If it does come in higher than what market were expecting, then there is a high chance that the US dollar will gain traction. But if the data comes in lower or even just as market had expected, we may not see a significant surprise in price movement, as price may just continue in the path it was following prior to the event. So besides this, we also have some bunch of speeches from Fed officials. We have Colin speaking in by 2 p.m. UTC, and we also have William speaking by 6:15 p.m. UTC. So these are events we also want to be looking forward to, especially after the Fed chairman spoke yesterday. We want to see what the Fed official will be saying as regards to inflation in the United States. So that is that here. And so the next thing we want to be doing right now is to go right into the chart, where we want to see how market participants have digested the information so far, and of course how they will be anticipating the events coming up today. And this obviously will reflect on the chart as structural patterns that we can use to strategically position ourselves for the next move. So with that said here, let's dive right into the charts. And as always, the first asset we normally take on is the USOILSPOT. Now, the USOILSPOT for me has been quite challenging. I entered a sell position very late this week after price broke down that ascending trend line for the first time in about 3 to 4 weeks, giving us this 100 plus move to the downside, remember. And then since price tested that area around the $67.50 level, we saw that in the last 3 to 4 days now, the market has been a little bit choppy, as price was initially caught within this range, that is the $68.45 level and the $67.75 area. However, this later expanded into the $69.30 level and the $67 area to emphasize the prevailing uncertainty in this particular market. And for those of us who are part of the live session on Wednesday, remember we were talking about buying $45 level. I think I mentioned this yesterday in my commentary on the Telegram platform, that we will buy at the breakout of the $68.45 level, which interestingly shares a confluence with that descending trend line. And of course, this happened, and price moved about, how many pips was that? It moved about 90 pips thereabout. And I can remember as soon as price tested that $68.85 area, I did updated those on my Telegram platform that we move all stop losses to secure the position. And since then, price moved about another 30 to 40 pips thereabout. I hope you are able to secure some profit on that one, as price moved into that area before dropping again to the downside. So since then, price action has come back into an area which is known to be a demand zone, at least since the midweek started. And for me, this is telling me that despite the traction we saw, the bullish traction we saw on Thursday yesterday, it shows us that sellers are still present in the market as buyers still find it difficult to continue that momentum to the upside. Now, why is that so? What is really happening behind the scenes that is making this to be the case? Now, from behind the scenes, if you were part of my live session on Wednesday, I did emphasize that the negative driver outweighs the positive drivers, as we saw the US dollar is very, very strong at this point in time, trading near its year-to-date high, making the US crude oil more expensive for holders of other currencies, and this potentially reduces the demand for oil globally due to the expensive nature of this commodity. And we know when there is reduced demand, what happens? Price definitely tends to drop, which has been the case since the week began. Then, in addition to that, we also got reports that OPEC Plus revised their demand growth for 2024 and 25 downwards, giving us signs that there will be a reduced global oil demand in 2024 and 25 due to slower growth in China, India, and other regions. Now, these are signal a weaker demand, and it is a bearish indicator for future oil prices, which for me makes the path of least resistance for the oil commodity to be to the downside. Now, with the Trump administration anticipated to roll back key energy policies, there is a likelihood of increased production, adding potential pressure to crude oil prices. So for me, the path of least resistance at this juncture is looking bearish, considering all of these factors we have mentioned. However, we saw the report from the stockpile report for the previous week, which shows that inventories dropped by 4.4 million barrels, hitting a 2-year low, which was far below what market had expected. Market was actually expecting a 600,000 barrel increase. Now, this for me is a sign that demand increase, hereby eating into the crude oil stockpile, resulting in that drop that we saw there. Now, this is the only factor here that could probably support an uptrend scenario. Now, if we take all of this into account, how do we think market participants are digesting this information? Is it going to favor the buyers, the sellers? Well, this can clearly be seen if we simply look at the price action since the beginning of this week. Now, if you look at the character of price action since the beginning of the week, remember we initially had a range-bound structure around the $70.42 level and the $69.90 area, where we saw price break down the support line to trigger that massive bearish move into the structure. And one interesting thing that happened here was that we saw price drop to as far back as the $70 area, and price came back up, and we can see there is a second attempt for price to continue in that particular direction, but it appears we are seeing a barrier around this area at the $67.75 level. Now, the question here is, will this hold? We never can tell, but in preparation for today's trading session, I do have a temporary demand zone right here around the 67 and the $67.50 area. And why is that so? Well, it is quite simple. You can see that ever since price dropped into this area, we saw how buy pressure resumed from that area, and in the last couple of hours you can see price is coming back into the structure, and we're noticing buy pressure coming in from that particular level. Now, for me, will this be a platform that will trigger another wave of bullish momentum? If that is going to be the case, I would like to see this descending trend line to be breached and broken to the upside before feeling comfortable to continue that uptrend scenario. So I'm looking at price breaking above both the trend line and that level at the $68.45 level. So if I see something like a breakout retest of structure, I will be keen to continue that uptrend scenario. And remember that prices below our key level at the $70 mark, and the fact that all market driver favors a downtrend scenario, we need to be very careful taking this buy position. So as soon as the buy position gets triggered, as soon as it's moved about 30 pips thereabouts, it's appropriate to remove all stop losses, secure the position at a worst case scenario break even, just in case sellers come in again. So please, let's be mindful of this. Now, in as much as we've considered the bullish possibility here, what are the chances that will make us continue a downtrend move? Well, for me to join a sell from this particular juncture, I would like to see price action take out the buy positions within the $67 area. So by the time price takes out the position, and that will reflect on the chart as a breakdown retest of the structure, then I will be willing to join a decline. Now, price may not just drop and test the structure. It could do something like this. So let's be mindful of this. It could do something like a breakdown and then probably come back to retest the $67.75 level. Now, for the fact that we have seen a breakdown of the structure, it will signal that sellers are finally gained that energy to break through that particular area. So even if it comes back to retest structure, the emergence of continued selling pressure will be good enough to continue that decline. So it's not all the time it will come back and retest the structure to continue the downtrend. It could even go to as far as this area. But if we can notice something like a lower high, then you can sell the breakdown of the neckline, then join that momentum to the downside. So I will only sell when price action breaks down the $67 area. So I will only consider selling as soon as that breakdown happens. Remember, we're waiting for confirmations to happen, which usually come in the form of a retest of structure. So this is the only condition that will make me consider selling at this particular point in time. So let's see how the market will play out as we prepare for the retail sales data coming up later today. So this is my simple view on the USOILSPOT for today. I hope I made myself clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds to see if there are any questions. You can as well take that time to also mark out those levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions today. Stay tuned in. All right. So in the absence of no questions, I want to assume that we are all on the same page. I hope you've marked out the levels accordingly. So we are looking at these levels and structures to guide our independent trading decisions for today. To buy, just a quick summary of what I talked about. To buy, we want to see price break out of that descending trend line. The one highlighted in red color right here. I need price to break out, retest the structure for me to consider buying this asset. And for me to sell, I want to see price drop below the $67 area, and not only drop below, I would like to see some confirmation happen before jumping into a sell. So with that said, I guess we should be moving into the next asset on our watch list. Stay tuned. So the next asset we are looking at is the USDJPY, that is the US dollar against the Japanese yen. And since the beginning of this week, we have been buying the US dollar against the yen, giving us multiple buy entries along the way, as we do have structures marked out to help us navigate this bullish trend. And of course, the factors behind the scenes has been supporting the US dollar against the yen from global economic risk highlighted by Japan's economy minister, where he showed concerns over external economic volatility and downside risk weighing on the yen, of course. And of course, we also have a situation where the Bank of Japan is divided, as a divided stance on rate hikes and gradual approach contrasts sharply with stronger Fed position as well, reducing the yen's appeal at the moment. And of course, the strength of the US dollar, on the other hand, continues to support the US dollar against the yen. And for me, the path of least resistance for the USDJPY still remains to the upside. Now, for the sake of those who are joining for the first time, or probably those who missed out on our earlier editions, let's run through what really happened at the beginning of the week that led to the decisions that made us to buy the USDJPY. So at the beginning of the week, we had a robust demand zone between the 151.300 and the 152.200 area, where the 152.200 area was our key level for the week. And you know how we use our key level. As long as price remains above them, we'll continue to look out for patterns and structures that support the idea of buying. Then we also had two important trend lines here that also played a significant role in our decision, one of which is the major ascending trend line we identified on the 4 hours time frame. So this was a trend line that has been supporting that uptrend scenario in the last couple of months. And then we also saw how price broke out of that descending trend line during the course of last week trading session. And look at how beautifully price broke out of the structure, and not only break out of the structure, it also came back to retest the structure last week Friday. And as a result of this observation, we were considering buying the USDJPY at the beginning of the week. Now, zooming into how the week started here, we saw how the week started on a strong bullish note. In fact, price started at around the 152.660, and we saw all of this move happen prior to our first session on Monday. So we actually missed out on all of these moves, which dovetailed to about 100 pips approximately. Though we were late to enter this trade, but we were opportune to make some money out of this position, out of the subsequent positions. So we had the resistant line of this range bound structure right here at the 156.670, and if you remember, this was where we said we'll be serving as our platform for buying opportunity for the week. So we were looking forward to price breaking out of the structure to trigger a buy position for us, and that was exactly what happened. If you missed out on the first entry the market was kind enough, came back to do multiple retests, giving us the privilege of joining that bullish move. And since that moment, we have been buying the USDJPY. Remember, we had multiple entries. We had the second entry here at the 154.00. We also had another one at the 154.745. Sorry, 715. We also added one more at the breakout of the 155.250. And yesterday, I updated us with another structure that we can use to maximize the potential of that uptrend move at the 156.00 area, as we saw price move about 70 pips thereabout before this bearish momentum began, following that impressive data from the GDP report from the Japanese economic docket, as we saw Japan's annualized GDP grew by 0.9% in quarter 3, surpassing the consensus of 0.7%. And besides the positivity following the GDP report, we also had from the Japan finance minister, that is Kato's, who pledged to take action against the excessive foreign exchange fluctuation, which appears to be favoring the Japanese yen at this point, as we saw price finally break down that ascending trend line for the first time this week. Now, first of all, let me congratulate everyone who was part of this profitable journey, and for those of you who stayed faithful with our analytical approach. So in preparation for today's trading session, what are our plans? What are the chances that buyers will continue the momentum? And what are the chances that sellers could come in probably as a result of profit-taking activities ahead of the weekend? You know, it is expected that major key players who had capitalized on this uptrend scenario, since today is the last trading day of the week, and considering the era of uncertainty we are in right now due to the geopolitical tensions are across the globe, we may see some profit-taking activity happen today, leading into price doing some retracement move. Now, to help us guide our trading decisions today, we have a simple structure, which is that ascending trend line you see here. So this trend line here has been supporting our bullish idea since the beginning of the week, as you can see how consistently and uniformly price action had respected this trend line. Look at what happened here Friday. You can see what happened here at the beginning of this week, and then look at what happened on Tuesday. Buy pressure resumed from there again, and look at what happened on Wednesday. Buy pressure resumed from there, and today we have seen price break down that ascending trend line for the first time. Now the question at this point is this a true breakdown or a false breakdown? Now, let's zoom into that current structure to see what is going on there. So if this is going to be a true breakdown, then we are likely going to be seeing price drop into this ascending trend line. Remember, this is the ascending trend line here that has been supporting the bullish momentum, I think, in the last couple of months. I think we will see this clearly on the 4 hours time frame. So let's look at it together so that we can be on the same page here. So look at what we have here. That is that ascending trend line. Look at how far it has played a significant role in this market. Can you see? So we may likely see price retrace back into this ascending trend line in an attempt to continue that uptrend move, or even break it down to the second ascending trend line. So is this something we would like to take? Well, if we look at the distance between where price action is right now and that trend line, we are looking at a minimum of 200 pips, which I want to consider taking advantage of. So let's go back into the 1 hour time frame here. So going back into the 1 hour time frame, let's see how we can actually capitalize on this. So if it turns out to be a true breakdown, then we may likely see price action come back, retest the trend line or the 156.00 area, where the emergence of selling pressure will be all we need to continue that downtrend move. So if that happens, we want to be looking at selling. If we start seeing selling pressure around this area, or if price does not do that, then we can actually look at the breakdown retest of this area here. So if we go back to, so we have the 155.250. I'll tell you why I'm choosing this level now, but hold on a second. 155.250, 55.250 level. Okay, so the reason why I have chosen this level is quite simple. Look at this area. It was a demand zone at some point here yesterday, and you can see as soon as price got into this area, we saw a sharp rejection. And in the last, how many minutes now? In the last 15 minutes, we have been noticing some buy pressure around that area. Now, if this level gets breached and broken to the downside, I am willing to continue that downtrend move, placing my TP target maybe somewhere around the 153.600, which lines up with that ascending trend line there. So that is one way to look at it. Let me rephrase what I just said here. So we have two options. Price could either come back, retest the trend line, the emergence of selling pressure on our lower time frame could incite a downtrend move. Now, if that is not the case, then a breakdown of this 155.250 will welcome selling opportunities. So let's see how the market is going to play out from that particular area. So that is the condition I'm looking at to jump into a sell position. Now, in as much as we talked about the bearish expectations here, we cannot ignore the potential that the uptrend still have the chance of continuing to the upside, considering the fact that we have this beautiful ascending trend line in place. And at the end of the day, this breakdown could turn out to be a false breakdown, shaking out a lot of buyers from the market before finally continuing in the opposite direction. Now, if that is going to be the case, where will it feel comfortable to join an uptrend move? Of course, right above the trend line will be making a lot of sense. And if you look at the structure we have here, we have the 156.00 level. It's a psychological area, considering the route figure of that price will be suitable to continue that uptrend move, as a breakout retest of the 156.00 area will be all we need to continue that uptrend scenario. Now, we also have the highest level here at the 156.645. So that will also welcome more buying opportunities if price action does break out of that particular level. So I will just indicate this right here. So we look out to add more buy position if price action ever breaks out of that particular area. So you can see we are at a crucial juncture at this moment where our center of focus is going to be between the 156.00 and the 155.250, where depending on how price action reacts to this confluence will determine if we are going to be buying or selling. So that is my simple view on the USDJPY for today. If you have any questions, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in. All right. So in the absence of no questions, I guess we are all on the same page, clear and comprehensive. So let's move on to the Hello, everyone. Sorry for that break. We had some technical issues, but I'm glad that we are back and running. So, thank you for your patience, everyone. So, we were about talking about the final asset for this week, which is my favorite, of course, the XAUUSD. And so far this week, we have done pretty well on this particular asset. Remember, the beginning of the week was more of selling the XAUUSD. Remember, price spent most of the early hours of the new week right below our key level here at the $2,680 area. And of course, when price remains below our key level, we want to be looking out for patterns and structures that support the idea of selling. Now, for about, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9 hours, we saw our price action kept oscillating within the 2,673 and the $2,666.50 level, emphasizing the prevailing uncertainty at that point in time. And during our live session on Monday, we talked about two things around this particular area, that we will be looking at buying the breakout of the 2,673 and that we will consider selling the $2,666.50 level only when there is a breakdown and retest of that structure. If you remember that, we talked about this there. And look at what happened immediately after the end of the session. We saw price break down, retest the structure, welcoming those selling ideas. And in fact, we were able to maximize the potential of that bearish move by adding another sell at the breakdown of the 2,655. So we were able to sell that move all the way into the 2,600, where I had my first TP target, and we were able to scoop in over 1,000 pips from 2 sell entries. Now, as soon as price got into that 2,600, remember we also talked about the possibilities that buyers may come in from that area. So this was the new setup I shared with us on my Telegram and TradingView platform. That was around that 2,600, where the previous sell positions hit TP target, and the emergence of buy pressure around this area, and for the fact that price action found bullish momentum along this support line of that descending channel, was a beautiful opportunity to join an uptrend scenario. But as you will see, the uptrend didn't last long. It wasn't sustained at all. As we saw, price only moved about, how many pips was that? About 160 pips in the first scenario, We also saw the second scenario. It moved about 140 pips before the bearish momentum continued again. And I think we also had another setup on Wednesday's trading session. Yes, we did. On Wednesday, right on the 15 minutes time frame, we marked out a new structure which will be helping us navigate this area. So this was what we were looking at on Wednesday. We had a beautiful descending trend line, as you will see here. And then we also noticed a temporary uptrend scenario right here. And we were saying here that if price continues to maintain above this ascending trend line, we are looking to buy above the 2006.12 and 50 cents. Though that position got triggered, we got topped out in a loss on that one. And then we saw what happened here. Price broke down the 2605 right below the descending trend line, came back to retest it. If you had missed out on that opportunity, and look at what happened, price continued the downtrend scenario, and this gave us the opportunity to join that final bearish momentum all the way to the downside. I only had one sell position on that one, never had the privilege of having more sell multiple entries on that one, but it was quite a good trade. The first 2-3 days of the week, we were already running with over, this one ran with over let's see how many pips was that. That was about 500 pips thereabout. So for the first half of the week, we were already doing over 1,500 pips on the gold commodity, which is quite commendable. And for those of us who are part of this profitable journey, well done and kudos to you. Now, for yesterday's trading session, I think we had a new trading setup. I had a new trading setup right here. This was on the 15 minutes time frame as well. So this was a structure I shared with us, where we saw a descending trend line, as you will see here. This was a descending trend line, and the inability of buyers to break through the 2,540 for me was a red flag that we might be seeing a short-term uptrend scenario. So I did updated us that since price has broken out of this descending trend line, that we will look out for a reversal pattern, price coming back to retest to continue the uptrend move. And if that is not the case, then a breakout of the 2,557.50 will welcome buying opportunity. So this was what happened. We saw price move up. About how many pips was that? About 200 pips thereabout before another wave of bearish momentum came in. So it has been quite a profitable week for us on the XAUUSD, but that doesn't mean that we didn't have some challenges too. For instance, on Tuesday stroke Wednesday, I had a couple of losses. So while we were trying to catch that move, we took some opposite moves which went into a loss, but thank goodness we were able to recoup these losses and make some significant amounts of profit on top of it. So for those of you who are part of this profitable journey, well done. Kudos to you for being faithful with our analytical approach. Now, as we head into the final trading day of the week, what are the factors that is powering the sentiment in this market? Is it still supporting that downtrend scenario, or are we going to start seeing profit-taking activities as market participants round off their trading activities for the weekend? Remember, they have been buying the US dollar, dumping the gold commodity throughout the course of the week. So are we going to see a situation where the gold will be so cheap that market participant will deem it fit to start buying ahead of the weekend? Now, before we can go into the technical details, what are the things behind the scenes that could favor both buyers and sellers? So let's talk about the buying potentials at the moment. First of all, the escalating tensions in the Middle East is still there. We have the rising conflict between Israel and Hezbollah in Lebanon, and the ongoing Ukraine-Russia war, which usually increases the appeal for safe haven assets such as gold, which is known to be a traditional safe haven asset. So usually this kind of scenario favors the gold. So this is a very good reasons for buyers to hold on to the gold commodity. Then another factor that we cannot ignore here has to do with the comments from the Federal Reserve Chairman, that is Jerome Powell, yesterday, where he did suggested a careful pace of rate cuts, which could provide support to gold prices, as slower rate cuts can help the metal retain some appeal in the meantime. However, besides all of this, majority of the sentiment is in favor of the US dollar. Comment section if you can hear me and see my screen clearly, so that I know that we are all on the same page. Everything is quite fine from my end here, so I hope we are all good. So, like I was saying, that in preparation for today's trading session, I have already highlighted a simple trading setup to help us navigate the structure right here on the 15 minutes time frame. And of course, I do have my buy position triggered already. Now, this is what I'm looking at after taking into account what happened during the later part of the New York session yesterday till the Asian session, and I was able to see a series of lower highs here, giving me a beautiful descending trend line to work with. And this also shares a confluence with this support line at the 2,565. This level here has been a demand zone. In fact, it continued to be a demand zone into the early part of the Asian session, as we saw here that every attempt by sellers to break through failed, and not until the early hours of today we saw price break down the structure. Since then, price action has come back, broken above the structure, an area which lines up with that descending trend line. And interesting enough, we are looking at something like a breakout retest of structure, which further helps supports the idea of a reversal setup that could push price to the upside. So anyways, I already have a buy position triggered already, and for those of you who had missed out on that one, well, we can still capitalize on it if price does not come back into structure. So we have the 2,568, so you want to be marking that level out right now. So the 2,568 area seems appropriate to add more buy positions if you missed out on that one. So looking to add more buy positions here will make a lot of sense at this juncture. So at this point, I maintain a bullish bias here. And another thing that made me support this bullish perspective is the way price action rejected the 2,556 here. Look at that hammer candle there, leading to the breakout of that descending trend line, giving us a suitable platform that could push price further to the upside. Now, in as much as we've marked out a bullish expectation on the chart, we cannot ignore the potentials that sellers have in this market. This market has been bearish since the beginning of the week. And we also talked about fundamental factors behind the scenes, which obviously has been favoring the US dollar. However, I still strongly believe that major key players will want to be taking profit, especially on a day that is the last trading day of the week, where they will be rounding off their trading activities ahead of the weekend. So it's the possibility of an uptrend is very possible for me today, but we will not ignore the fact that sellers could still come into play, especially if the US economy data today comes in higher than market had expected. Remember, we are looking forward to the retail sales data, and market were looking at 0.3%, a little bit lower than the previous month data. So if it comes in higher than market had expected, we could see a traction in favor of the US dollar. So if that is going to be the case, where will it be reasonable to join a sell? Well, I would like price to drop below the structure, that is take out the buy positions here at the 2,556. If that happens, then I'm keen to join a bearish move to the downside. And interesting enough, that will also admit price back below that descending trend line, which will be considered to be a seller's territory. So for me, that is the condition that will make me consider selling the XAUUSD. So let's see how that will play out. And if price continues to drop, we have the 2,540. That's the lowest level for this week. Price breaking down that structure will definitely welcome more selling opportunities. So that is my simple view on the XAUUSD. So just do a quick summary. I already have a buy position triggered and looking forward to more buying opportunities above the 2,568. But if this old breakout turns out to be a false one and I get taken out of this position and sellers begin to gain momentum, I will not be considering selling unless the buy positions at the 2,556 is taken out, and this would reflect on the chart as a breakdown retest of that particular structure. So this is my simple view on the gold commodity for today. It's a simple trading setup right here on the 15 minutes time frame. So let's see how this is going to play out, and I wish us all the best of luck on this one. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any before we round off on today's Forex Morning Mastery. And don't forget to give that video a thumbs up. I'm yet to see your likes, guys. We have over 8 people, 9 people on board, but the likes are way below. Let's make the like tally with the number of people on board, and thank you very much as you do so. So I'll see you all guys in the next 5-10 seconds from now. Cheers. Alright, so in the absence of no questions, we have come to the end of today's Forex Morning Mastery. It has been a great day, though we had a little bit of hiccup as a result of technical issues, but I'm glad that we are back on to end the session. So we've taken on the 3 instruments on our watch list. In fact, we've done pretty well so far this week, monitoring the USOILSPOT, the USDJPY, and the gold commodity. And I do hope you marked out those structures and levels we have identified on the chart that will be helping us navigate this market today. If you have done so, well done, kudos to you. So all we need to do is exercise patience and allow the structures to mature. And for those who join us for the first time, I do hope you are able to gain 1 or 2 things from what we've discussed here today. If you did, you want to be part of our subsequent editions, trust me, the more time you spend with me, the better you get to comprehend my analytical approach. And a word of note before we end, please always understand, or I hope you realize, that the financial market is an uncertain and unpredictable environment, and you do want to be having a well-defined risk management strategy in place for every move you take in the market. So I want to wish us all the best of luck, and if you're yet to subscribe to the channel, please do. I will be sharing some ideas on my plans ahead of next week during the course of the weekend. You don't want to miss out on that one, as it's going to be serving as a platform for the first edition of the Forex Morning Mastery for next week. So click on that subscribe button, click on the like button, and thank you very much for your support, guys. So I want to wish us all the best of luck today. And do have a wonderful weekend. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.